Welcome to the October 15th, 2025 edition of Northwest Quadrant Wealth Management's e-news. Winter is back and we're certainly hoping for a return of some sunshine. This week kicks off earnings season and the big banks have started reporting. The results have been absolutely fantastic. On the consumer banking side, Bank of America, Brian Moynihan pointed out fantastic results and really strong, vital consumer. On the investment banking side, we've seen a massive expansion in deal making. Companies are going public again. The investment banks, Morgan Stanley and Goldman Sachs, both reporting blockbuster earnings. And we are certainly seeing a lot more vibrancy in the capital markets. The IPO market had been dead for quite some time, and expect 2026 to be more of the same. Some of the largest leverage buyout ever wasn't even included in the quarterly earning results. So the big banks are all very optimistic. Artificial intelligence and capital expenditure is definitely leading the way, responsible for most of U.S. growth. There's seemingly no near-term end in sight to that. I think the big takeaway that we want to convey to clients over the near to medium term is expect continued capital expenditure in the artificial intelligence space to be inflationary as these data center projects start to come online. And they're just massive amounts of raw material inputs, particularly electricity, that are going to be inflationary for anyone that lives near a data center. Oregon actually happens to be number 2 domestically on the list of places with rising electricity prices. So clients in Oregon will definitely be experiencing that. But with the resumption of earnings season, of course, we need to see rising earnings to support what are very high stock valuations. If we get the double-digit earnings growth as anticipated, it will help a bit on the valuation side. But we're very optimistic that this earnings season will continue to be great.
Yeah, the other thing I think that will cause volatility in markets in the short term is this ongoing trade war with China. That's sort of a tape bomb that, as we experienced last Friday when we got a tweet from the president that caused markets to sell off. And so when markets get this expensive, there can be lots of tape bombs, we call them, where a tweet or something can set markets off as it relates to the trade war with China. Nobody ever wins a trade war, but I guess time will tell on how this one ends. There's no question about it that stocks are expensive, and this period, as we've talked about a lot on this, reminds us of the late 90s where stocks got really, really expensive. We're at similar valuations to where we were in the late 90s, but we don't know where we are in terms of is this 1996 or 1999, because at some point all of the spending on AI, people are going to realize that there's not going to be a return on that investment, and we're going to come back to earth. And so we don't know how long that is until that happens. But the important point for all of you is that we are globally diversified in our asset allocation. And so if you go back to a market that got really expensive like the late 90s, or even markets in other periods, if you had a globally diversified portfolio, when that market did roll over, the globally diversified portfolio, like all of you have, held up really well. So we are really optimistic about where our portfolios are right now. If you look at our developed international market exposure, it's almost double the return on a year-to-date basis to the S&P 500, and every one of you have that exposure. So we like our asset allocation. The important thing to know is that if we do get a market rollover, we really feel good about where we have all of your money going forward, and we'll be rebalancing as markets, if they continue to go up. We certainly like markets going up, but we will be rebalancing into those meteoric rises in stock prices as a risk management tool. So as always, if you have questions about your situation or your portfolio, give us a call at the office, 800-743-0988, or you can email Josh or Tyler at northwestquadrantwealth.com. We'll see you back here in a couple weeks.